Is it possible to get a 2% mortgage in the marketplace right now? Well, the answer is yes. There's a new company called Rome that plans to offer borrowers just that. Let's take a look and see how it works.
I'm Kiwi of the coast, the agent with the most.
Helping you maximize and sell the value of your coastal home, right? Let's see who these guys are and how these low mortgages work. So the goal of Rome is to help consumers, home purchasers and borrowers take advantage of those existing low interest rate loans by assuming them. This includes FHA and VA loans, which are both assumable loans. Now, Rome has a system and a process in place that for a 1% fee will hopefully create a smooth assumption process. Now, backing up a little bit here, the loans that we're used to here in Orange County probably are not going to be qualified because a lot of those have due on sale clauses and they are not assumable. So this is a select market of a small group of loans that have those assumable capabilities. Borrowers, they still need to qualify for these loans, and in many cases, the delta between the purchase price and the amount of that existing loan that was originated when prices were lower has to be covered, and more on that shortly. Rome acts as a hands-on guide to facilitate the assumption of loans, and they charge a 1% fee. Now, the process of assuming loans that are FHA and VA backed can be quite a complex and lengthy process. To simplify and ensure a smooth process, Rome has taken over all the operational aspects normally attributed to buyers and sellers and real estate agents to facilitate the process. And furthermore, and this is key, help find those particular homes that have those existing assumable mortgages that can be assumed. Now, upon signing up at the website on Rome.com, they will provide a list of properties that are available for sale that have these type of assumable loans. So that's a benefit for consumers. And Rome even goes the extra mile by customizing the search, certain price ranges, locations, bed, bath, square footage, and so on to help the consumer through the process and be looking at the homes that are going to best suit their needs. Now, it's important to note, however, that Rome currently covers only FHA and VA loans and not USDA loans. If you find a property that piques your interest, then Rome will help collaborate with the lender and loan servicer to help you guide your way through the process. And of course, it also helps with the release of liability associated with the underlying lender, because typically a lot of them have due on sale clauses and they want to be paid off when a loan is assumed. So very important for the sellers, the ones that originated the original loan, is that they have no more liability under that loan when it's assumed by the new buyer moving forward. Now, one of the biggest challenges, of course, is the price delta between the existing loan and the purchase price, because typically these loans were made when the purchase price was a lot lower and they're acquired at a lower price. So when they're on sold, there's typically more of a delta. That's the difference between the loan that's assumable and the purchase price. And there's ways to bridge that gap. Here are some of them. Number one is preferred partners. Let's say you have a purchase price of $550, but an existing loan that's assumable at $450. Well, that's a $100,000 price delta. So they have preferred partners that can come in and lend the difference between your down payment, which might be $50,000, and the extra $50,000 that you need to consummate the deal. Also, there's the potential for sellers to carry back seconds to also help bridge the gap. The end result is it's going to be a blended rate between those low rate loans that you're assuming and the second loan that either is originated and carried back by the seller or provided by a third party. For example, a 2.5% existing loan at 70% loan to value, coupled with a second, which could represent 10% of the purchase price at 8%, gives you a blended rate of 3.2%, which is still seriously below new loan rates out there. Rome listings only feature mortgages below 5%. That way they can offer substantial savings to borrowers out there. Assumable mortgages have found relevance in today's mortgage market because of that substantial increase in new home mortgages, upwards of 7+% today. So this represents an opportunity for home buyers to assume mortgages at the lower rate and therefore preserve lower payments and opportunities for buyers to still enter the marketplace. There is restrictions on where these loans are able to be assumed and in which states, and you have to do more research to figure out which states these types of loans apply in. So this represents a substantial opportunity for homeowners to assume loans in the 2% range and still have significant savings even with the 1% assumption fee charged by Rome. So for instance, $500,000 home, $400,000 mortgage, 2.5%, we're talking payments in the 1500s. You cannot get that today at those higher interest rates. Rome is currently available in select states and will be expanding into different marketplaces very soon. Make sure you click on the video on your screen right now so that you can see the next video in my market update series. Click now and we'll see you there. The Room.